Hello, Alan Posner, Sea Lion Capital Management, with a market update for Thursday the 11th. And let's see, Tuesday we saw the market sell off quite a bit, but here Wednesday and Thursday we saw the market bounce back. I just want to remind everyone that this video is for educational purposes only, not a solicitation to buy or sell anything. We do use the Sea Line indicator as our primary vehicle for technical analysis, and so we're going to talk a lot about the indicator in these videos. If you're not familiar with it, I encourage you to visit sealinellc.com. You'll find two videos there, part one, part two. Learn the Sea Line indicator, put it on your own charts, and having said that, let's go take a look at the charts. Back on we're going to start with SPY, of course. And back on January 11th, we saw hit a new high here at 115.13, and then sold off pretty hard the next day. And in the last couple of days, we've seen nice up moves again. Still don't get a long signal from the indicator because our bands are just too close to each other, particularly this bottom one. And really, it's because there's just not enough momentum. The two really good volume days there were the pullback on Tuesday and the follow through on Wednesday. Other than that, the volumes continue to be terrible, but we still don't have a long signal. We do down here on the Arun, but not from the Keltner channels. The rate of climb is just not strong enough to get a good strong signal from it. And this is a 60-minute chart of SPY, and just want to stay on the S&P 500 theme for a moment. This is a Fibonacci fan, and if you're not familiar with that, it has the Fibonacci ratios measured out over time. But if I mark the low here on the 4th and measure it up here to the high on the 11th, you can see we gapped down through the 38.2, rested on the 61.8, and now we've resumed. Today we closed with the same high we had back here on the 11th, and so I think the challenge tomorrow, as well as into next week, is whether we're going to break through this resistance or we're going to pull back, find this trend line, or maybe even violate the trend line. But we did kind of tag the same high area, and we did find support here at 61.8. So I just want to make you aware of that. Quick look at the small cap. They also made a new high here at $64.88 on the 11th. Pulled back, didn't quite make the high that we made. Tag the same high level that we had like in SPY, a little bit lower. But probably the thing that's most different between IWM here, the Russell 2000, and the S&P 500 is the Arun no longer giving us a positive signal. Instead, it's all tangled up. And of course, again, our Keltner channels too close to each other. So no long signal on either the large cap or the small cap. Large cap looking a little bit healthier at the moment, however. Want to go over some of the trades that we've had over the last couple of days. We had opened up back on the 5th. We'd gotten a signal, but it wasn't until the 8th that we made an entry on EWI. This one unfortunately ended up being a loser for us, although we popped higher the first day. The next day, as we moved our stop up, price came slamming down. As you can see, EWI's really not been going anywhere. So unfortunately, that one did not work out well for us. We did end up taking a 0.7% loss. And a similar circumstance here in XLB, which was another trade we opened back on the 5th, but this one's for a 0.7% gain. We were actually quite a bit higher there for a while, but as you remember from the last video, we had gotten this big dark cloud cover, and I was concerned the next day we might see lower prices, and boy did we ever. We got the big gap. Came right down here through our stop, and although on Wednesday the market did rally a little bit, you can see today, even though the market was up quite a bit, the materials sector was down. So it did underperform, but we did take a nice small profit there. And we did open a new position yesterday. And our new position is EWJ, which is the ETF that tracks Japan, and did get a nice pop here today as well. We're up, let me measure that for you. We're up about 1.7% in this trade. So tomorrow we've raised our stop to 1024. So we're beginning to approach our break even at 1031. And this was one of those where we did not have a natural stop. Here we got the signal. However, we weren't able to go back far enough to get a natural stop, so we used 2.5 times the ATR. And so $10,000 account owns 535 shares, but let's see what happens over the next couple of days and see if we can get EWJ to continue higher. Before we wrap things up on the blog here tonight, I just want to show you a few of the sector charts I'm watching carefully. The financials. We talked in the last video about coming up here against horizontal resistance and would we be able to overcome this resistance. As you can see, we did fall back and have since then rallied back up to it. So I think the challenge remains the same as it did back on Monday, whether or not we can break out above this 1525 area or so. Another sector we talked about in this respect is XLE, which is the energy ETF. Came up to resistance. It's fallen back, and as you can see, unlike the broad S&P 500, has not rallied nearly so well. Of course, crude oil has really just been dancing around. It did pull back, I think, about $1 or so today. Also keeping an eye on XLK, which is the technology ETF. As you can see back here on the 5th, it made a nice high. Really did have quite a pullback to our center line. And now we've seen a couple of updates, so we'll see if it can regain its momentum, start moving higher. We did get a bearish cross on the lower portion of the Keltner channel, but obviously not sufficient for any kind of a signal. And believe it or not, we do have a bearish Arun. And what's kind of interesting is a lot of people, of course, have pointed to technology as the main driver in the recovery. But at the moment, it seems to have lost some momentum. We'll see if these last 2 days represent momentum regained. We had this hanging man right here that was confirmed by the big down day. I think one could say perhaps we've gotten the hammer right here that will start the rally back up again. I'm going to be very interested to see whether this low is followed by this higher low, and here's the higher high, and that we get the higher high. So I'll be looking carefully at this as well, see if we break out over this 2330 area, let's say over the next 4 or 5 trading days. And the last chart I want to spend a moment on is IYT, the transports. Down here made a swing low back here the last day of last year at 73.74. And then since then on the 11th peaked up here. And the last couple of days they had the pullback, but not to the extent that a lot of the other stocks or indices did. And then now they're just kind of treading water. So also watching the transports carefully, see whether or not they roll over or put up a new high. Some of the sectors like the transports, the financials, energy are going to be critical to move the broader index higher. So those are ones that I'm keeping an eye on, as well as industrials, healthcare, and a couple of the others. This has been Alan Posner, Sea Lion Capital Management. Our next video will be Tuesday the 19th. And until then, I wish all of you the very best of health, and God bless.